Are you prepared or will you be left behind? US dollar is clearly failing, and people still seem to think that Bitcoin is some magic internet money. Well, I'm here to tell you there's plenty of evidence that suggests not only otherwise, but completely to the contrary. And I'm going to break that down for you right here on BitLab Academy, here with the Discover Crypto crew. I want every single one of you to hit that like button, hit that subscribe button, ding the bell, because we're going to be breaking down why the US dollar is failing, how we can prevent ourselves from being left behind, and how we can capitalize by staying ahead of this major change that's not only going to happen in the US, but it's going to happen globally, and it can happen for you as well if you're participating in the right way. My name is Kellam. Welcome to the BitLab Academy stream. Welcome, Discover Crypto crew. And I just want to tell you right now, if you're watching this video, whether or not you've bought Bitcoin or not, you are already ahead of the curve. If you haven't yet and you're on the sidelines, stick with me here. I'm going to break down a bunch of different charts. I'm going to make it easily digestible, and I'm going to break down exactly how the dollar is failing and show you why you're already getting left behind. That's what this is about. This channel is all about breaking down tools, strategies, and skills so that you can navigate your future rather than having your future be navigated away from you. So hit that like button, hit the subscribe button, ding the bell. Let's dive into this. First things first, welcome to the show. Thank you for being here. And again, join us in our community. It's a positive one. It's all about helping you stay prepared. What is this chart? If Bitcoin is a scam, then what the hell is the US dollar? This is the buying power of the US dollar since before 1920 all the way till about 2020. Okay, 100 years. This does not even account for the massive money printing that happened post-pandemic that already started. We can see it devaluing our dollar. This is what inflation has been. This is why everything that we're doing seems to be more expensive. People that are making more money than they've ever made, yet they're still falling behind. I lived in New York. I had friends that were doctors that had to have roommates because they couldn't afford where they lived. Now let's go ahead and break this down for just a moment here and just take a look at some of the key things in history. Federal Reserve Act creates a central bank with the ability to manage the country's money supply. Now remember, the Federal Reserve is a private institution. It's not a government institution. So why they have authority over how we spend our money, I don't know. Seems a little bit hinky to me, but let's continue on. US President Roosevelt criminalizes the possession of gold. You're not allowed to hold your assets. Why is this? All the way back, early 30s, it was people already becoming aware that it made more sense to hold a different asset rather than fiat currency, AKA the US dollar, or any government currency, if you think of it that way. But in this case, in the US, holding a currency or a store of value other than the dollar was already becoming something that was an issue because people saw the lack of value in the US dollar. Why? Because it is trust-based. What is Bitcoin? Trustless. That doesn't mean you can't have trust in it. It means you don't have to trust or rely on anybody else's management of that asset if you're going to hold it. Trustless. Bitcoin. There's only ever going to be 21 million, finite supply. In addition to that, it is based on a computer network where everybody is agreeing on all things that are happening on network. Excuse me. Thinking about the fiat dollar is just making me cough because I'm disgusted with what the US government has been doing over the past 150, 200 years, and most expressly in the last 3 years. We're printing the dollar out of any form of value. And yet US banks, the narrative on a lot of the major media stations or major media organizations over the last 10 years, thankfully have started to change their tone about Bitcoin because we have people finally giving a stamp of approval like Larry Fink, the CEO of BlackRock. But they've been talking about how bad this is when it's the most transparent and finite resource, provably scarce, programmatically understandable by everybody. It's verifiable at any moment. Why would they suppress this? Why would they put up bad articles about this? Why would they do negative news hit pieces on this? One, there's lack of understanding, but you're here. If this is your first time watching me or watching this show or even hearing about Bitcoin or first time looking into it, or if you've been here for any period of time, we have to recognize and realize that we all need to take more responsibility for ourselves. And Bitcoin provides us that opportunity. That is why the US government has suppressed it. That is why major mainstream media news outlets have been funded by banks and provided the wrong information about how bad this is. Oh, it's used for money laundering. Well, before Bitcoin, how was money laundering done? Through JP Morgan, through other major banks. The currency is not the problem. The institutions are. We've taken institutions in terms of the management and the sculptability of how the fiat system has been run primarily over the last 60 years, 70 years. The US dollar has lost a huge amount of its value, its buying power. And I'm going to show you some more charts on this to understand, but let's continue on here. The Bretton Woods Agreement establishes the gold standard and the US dollar as a world reserve currency. This is in the basically mid-40s. Then we have the gold standard is abandoned. Why? Because they could not keep up with the way they wanted to mismanage the fiat regime that the US was under. Because they could not have one-for-one backed dollar to gold. So they abandoned it. So now the US dollar is backed by nothing. I believe this was at about 1971. So if Bitcoin is magic internet money, it's not backed by anything. Okay, let's take that argument to side. Let's ask ourselves, what is the US dollar backed by? You know what the US dollar is backed by? Military. That's it. There's nothing that substantiates the value of the dollar. In fact, the only thing that happens with the dollar consistently, and you can prove it on any graph you look at, is a devaluation of the dollar over time. So if it's going down over time like this, which direction is this trending? Is this trending up? Is this an asset you want to be in? Or is it trending down? I apologize for the coughs. Okay, moving on. Quantitative easing begins in response to the financial crisis. This is 2008. This is the printing of money, injecting falsely produced money with no backing into prop up and quote unquote save. But let's actually talk about what it is. Continue the manipulation of markets in a way that appeases people, that keeps everybody quiet, that helps you, not rise up. And I don't want to make this a revolutionary video. That's not what this is about. We're talking about the devaluing of the dollar while Bitcoin is proving itself, and it already has by code and by what has happened since 2009, 2010, over the last 13 or 14 years, that it is the best asset in the world that has ever been created. What's it substantiated by? Verifiability of all the computers on network, all the miners securing the most secure network in the history of the world. AI cannot crack Bitcoin. You cannot hack Bitcoin. When you hear about people their Bitcoin was hacked, their Bitcoin was not hacked. Their account in the process through which they were managing their Bitcoin may have been hacked, and typically has to do with user error, much like any bank out there. You see people getting their banks hacked into because maybe they used the wrong card reader somewhere and their numbers were swiped, or they clicked on the wrong link and gives people access. Bitcoin itself is the most secure network in history. But let's talk about this devaluing of the dollar. Continuing on, the U.S. money supply grew by $3.8 trillion in 2020, equal to 20% of all dollars ever created. Does this give you instance to consider the value of the dollar is going to be going up over time? They have no limitation on how much money they can print. So let's talk about that. What does it mean? Moving on here. Here's two simple lines. I propose you two simple lines. Which asset is an asset that looks like it would have provided somebody upside over a period of time. Well, this is a US dollar. This is the buying power of the US dollar from early 1970s till about middle 2022. This is 2010 Bitcoin to now. This is not just the dollar value of Bitcoin. This is the purchasing power. How much you can buy with Bitcoin, whether you're dividing it into Satoshis, whether you're utilizing an entire Bitcoin. The point is the value of Bitcoin is going up over time. And I'm not talking again about the value of an individual Bitcoin. I'm saying if you have one Bitcoin back in, let's say 2010, you couldn't buy much with it, right? Because it was very, very cheap. At one point under $1. Now you can buy with the current price of Bitcoin, and it's October 5th. And I just want to point out, this video is meant to be watched anytime because this is going to hold true. But considering where Bitcoin is today at the $27,500, $28,000 region, how much can you buy with one Bitcoin today compared to 2010? That's what we're talking about, the buying power of Bitcoin. And what we want to do is investors or market participants, or even realizing if we're not investing or buying Bitcoin, we are still a market participant by nature of going to stores, shopping, buying stuff online, living. We live in a world that you trade some sort of monetary asset for other services and goods. That's the nature by which most economies around the world are based, societies. So we want to look at assets that are increasing in purchasing power over time, not being devalued at a faster pace from which you're also getting the average household income. And I'm going to show you some more charts on this. So let's move on to this next thing right here. It's actually, look right here. As it happens, the purchasing power of the US dollar, which determines the amount of products and services you can buy with it, has been steadily weakening over the years. Whereas Bitcoin essentially has been sharply rising since 2010. Remember, 2009, 2010, this is when it really emerged. This is after the white paper was released, and then it was actually released into the wild, into the hands of the people, controlled by all people, not by a central authority that you need to trust and hope that they don't screw you, which is essentially what fiat dollars are doing. According to the macro comparison chart shared by the finance analyst known as Seth here on April 4th. So this is April 4th, I believe it might be 2022, might be 2023, but the point is here the same. The value of Bitcoin over time, how much you can get with it, is going up. And we see record low, I don't want to say record low, we see incredibly low adoption rates as it stands right now. And we have a whole world of people and a whole world of institutions and a whole world of processes that have yet to integrate this into their way of doing business, into their way of life, into their cultures. There's so much to come for Bitcoin. There's so much positivity and growth. There's going to be volatility along the way. So I urge you to be patient through all of this, because volatility is something that was programmed in to Bitcoin because it helps with the nature of adoption. Why, you say? Why would bear markets bring on adoption? Because when you have these explosive bull markets that happen every halving, remember the halvings are essentially miners on network every 10 minutes are competing to mine blocks. And mining a block just means to confirm that block and all the transactions in it. All the other miners on network are agreeing. Everything in that block we see too, that is agreeable. So there's no trust needed because everybody's agreeing on all the transactions and they're competing to secure the block. When they secure the block, they get a reward. The halving happens every 210,000 blocks, which, because blocks on average are roughly 10 minutes, translates to about 3 years and 10 months, 3 years and 11 months, which is why people call this, there's a 4-year cycle in Bitcoin. The boom, bust, and accumulation phases. The boom happens post-halving. If we come over here to this chart, I'm actually going to come off this chart here. If we look at the halving cycle, where is it actually at? Looking at the halving cycle, this is the halving right here. We've talked about this. Halving right here, post-halving. What is the halving? Remember, miners get block rewards after they compete to secure a block, and the one that wins that, I don't want to call it a contract, but they win the opportunity to mine that block and confirm it. Everybody else has agreed. Currently, they get 6.25 Bitcoin. The halving happens sometime roughly about April 2024. And it'll be roughly 3 years and 10 months-ish after that for the next halving. So look at this as a halving, and then how different cycles on Bitcoin have performed post-halving. Well, post-halving, look at this strong parabolic rise. And this next one, a little bit slower, but still parabolic rise. And then the current one we're in, we're seeing, look at this. We have strong rises. We have market cycle tops. And then we have these basically bear markets at bottom. And then we get this form of accumulation, a little bit of chop into the next halving. And everybody's waiting for this to repeat. And what's going to happen? We can't know, but we can look historically at the Bitcoin cycles and see that the boom and bust cycles, while they feel scary if you're unprepared, which is why you need to get into bitlabacademy.com. If you haven't yet, check out bitlabacademy.com right here, because we have all the courses, all the resources for you to understand what's going on in these markets. Man, I got the coughs today. Now, coming back over here to the halvings, boom and bust. Now, again, why do we want boom and bust? Because these large booms bring in a lot of awareness, brings in a lot of new eyes. We get basically free press. It's a free marketing engine to drive awareness and interest in Bitcoin. And then people take profit, it sells off. Some people get burned when they don't have a strategy. Then they see the market still chopping around, and a lot of people end up at some point buying in again. And the process here is for you to learn from your mistakes. Do not be a hype cycle buyer and buy near a top because it's high. You don't make money and profits over time in any asset class by buying high and selling low. If you're going to buy Bitcoin and it's somewhere up here, I'm not faulting you for it. Buy it and have the strength to hold, especially if you're buying above a previous all-time high. But then we have a period of accumulation, and most retail is scared to buy there. And it's down so low. But if you look historically, if you look at the regularity of these patterns, this halving cycle, roughly 4-year cycle we're seeing on Bitcoin, we know halvings tend to have a pretty strong impact post-halving on strong bullish momentum, prices going up, and then having the sell-off period, taking some profits. The lows always quite significantly higher than the previous lows. So although we're getting these huge bull market pushes to the upside, and we get these, feels like the never-ending world's going to end with these sell-offs. Those sell-offs, because of the exponential growth in the bull market, the floor of the next bear market is significantly higher than the previous bear market low. And what that means is we're stair-stepping up. So what's critically important in this is understanding that there's certain cycles and certain repetitions that we can utilize to our advantage to identify areas that are great for layering in or taking an entry in Bitcoin as an asset in your portfolio, whether it's the first time or you're stacking in, or you just have a DCA strategy, dollar cost average, meaning you're picking, let's say every Monday, you're buying $25 worth of Bitcoin, or maybe once a month when you get paid, but just sticking with that over time and getting the average entry, averaging out what your entries are on Bitcoin over time, and not worrying about the ups and downs and all that, just looking at it long term. And I'm going to show you why right now. Coming back over to this chart, dollar going down over time. Dollar's not backed by anything. Money printing out of control. In fact, we see yesterday, here in early October, we just put it over $275 billion more on the M2 money supply. We're adding this to our debt. We're adding this to our debt on a daily basis, so much so that the GDP cannot even keep up with the debt that we have. Something is coming, whether it's in 1 year, 5 years, or 10 years. This is not trending in a direction that feels safe unless you have a hedge in an asset that is not controlled by the same monetary authority, that has different programmatic characteristics, that you can also not have to trust anybody, because exactly what Bitcoin is, it is trustless. It is a network of everybody agreeing on every transaction and the security of that comes with it. Now, what does this mean? Bitcoin's going down in value. Sorry, US dollar. What does this mean? US dollar's going down in value. We see that Bitcoin's going up in value in purchasing power. Well, let's kind of come over here to this next chart right here. Well, U.S. debt has been doubling every 10 years so far. You see this 1993, we only had $4 trillion in debt. That would, I mean, if we got to $4 trillion in debt from there, I don't think we'll ever get back down there. 2005, $8 trillion. 2013, $16 trillion. 2023, $32 trillion. And I already know, as it stands today, we're over $33 trillion in debt. What does that mean for the asset that debt is in? It's not a good thing. Let's go to move on here. Now, just pay attention to this. I want you to, this is the basically rent price from early 1985 and progressing into basically current times. Red line is the cost of housing, essentially, aggregate. This is a rent, but the rent's going up because the cost of housing is going up. Look at this. This is a major, terrible, as I wrote here, a very bad divergence in how much it costs to have shelter versus how much people are earning. Look at this, flat line. Yes, push up here, but it's essentially just been flatlining over here. A little bit of growth here, great. Let's throw them a bone. How can you keep up? How can you keep up in this economy when everything is outpacing your ability to increase your income? All of us, I'm sure at some point, have wondered why, whether it's our mother or father or aunt or uncle, somebody older, in an older generation than we are, we wonder, how did they do it? How did they do it? How did mom or dad or grandpa or grandpa or grandma or Aunt Sue or Uncle Larry, any of these people that are older than us, how did they, when they were younger, own a house by the time they were 25, have 3 kids, and buy a car cash? Did they have better principles in how they manage their money? That's probably one of the cases, because we have bastardized entirely our ability to understand money management. In fact, why is this not taught in school? It's freaking bonkers. It's like they want to keep us down. But if we take responsibility for ourselves and realize not everything in our life is because of somebody else. Yes, there's going to be what's known as structural violence, meaning certain systems and certain processes are set up in a way to make it harder. This happens globally. But if we take responsibility with the advent of how much information we have access to now, as culturally, everywhere in the world, internet, phones, social media, we have access to all this information. We need to take a stand in what our own sovereignty is, what our habits are going to be, what we are doing to be better and have a more secure life, a more fulfilled life, not be beholden to needing to do 4 jobs just so we can, pay for school and a housing and equipment and, clothes for our kids on the first day of school, and also take family vacations like we did when we were kids. But how the hell did they afford it? I'll tell you how they afforded it, because everything was cheaper then. In fact, back in the around the Great Depression, when things were supposedly supposed to be so bad, the average income, if you adjusted it for inflation, would be about roughly around $80,000 today. The average home was about $75,000 to $80,000. So the average person in the Great Depression, when things were so bad, annually on average made, can you believe this? Made about as much or a little more than what the average cost of a home was. The average cost of a home today is roughly $400,000, while the median income is in the 50s. That is not setting you up to be able to take control of your life. And this is, if you think about it, this is what we're talking about when you're using the value of goods in life, things that you need to survive. The purchasing power that is involved with this is the US dollar. This is why Bitcoin is so threatening. So coming over here to this chart right here, this is from Sin City Crypto, friends of the channel, wonderful guys. This is insane. We have all these interest rate hikes right now because of inflation. Why do we have inflation? Because of all the money printing. So because of the interest rates as they are right now, a $400,000 house over a 30-year fixed mortgage would be $1 million. And this is not a mansion. This is not the nicest thing on the planet. This is just a house, humble house where you want to raise your kids and not get left behind. This is all due to the loss of purchasing power of the US dollar, the higher demand out there to buy, the availability of money to drive the price of things up. Why is there more money out there? Because they're printing out of control. So what do? Let's continue on here. We can also see here, simple metric. Okay, you don't care about a house, you can live in a tent. Here's the average price of eggs as measured in US dollars. How many eggs can you buy in dollars? Well, let's go ahead and look at this next one. Look at how much average price of eggs, how much Bitcoin you need going down. What does this mean? Doesn't mean you're getting less. This means you're spending, it takes less of a Bitcoin to get the same amount of stuff. What happens over here on this last chart? Look at this. You need more dollars to get eggs. Okay, very simple. Come back. You need less Bitcoin to get eggs because the purchasing power of Bitcoin is rising. And we are so early in the level of adoption globally that this is, you can only look at it in terms of a statistical and a historical analysis based level. And barring any sort of absolutely catastrophic energy grid issue worldwide where we have no internet and no computers, other than that, the purchasing power that I would want to be behind is something that's going to go up in value. You're not going to have to spend as much of it. What you're holding now is programmed to go up because we have inflation programmatically going down every 4 years with the halving, while adoption rates are actually going up because of everything that is a part of Bitcoin. This is important information. Share this with your friends. Share this with your family. The US dollar is not where you want to be. Even if you don't believe in Bitcoin and you're not, isn't it worth getting a little exposure, getting more comfortable, diving in at least to more education? Even if your exposure at this level is just education, isn't that worth it? The US dollar is not doing a damn thing for you. So why would you not want to look into this? Why would you not want to strengthen your knowledge base on something that is slated based on everything that's involved with Bitcoin, what it is, the community, the transparency, the fixed, absolute fixed supply? You can never have more than 21 million Bitcoin, whereas every government in the world right now is printing out of control, devaluing every dollar you have, essentially taxing you, making everything you've done less worth it. So you have to work harder. So you have to be a slave to the system. Why would you not want to look into Bitcoin? Now continue on. Okay, looking here, we can see Dylan LeClaire says this. He wonderful analyst in the space. Check him out if you haven't yet. Dylan LeClaire with the underscore after that. But we can see right here, he kind of laid this out. Why? Not just because he had an inkling, a thought. He was looking at graphs and charts and historical data about all things and how the cyclical nature of the government, of having, whether it's a manufactured issue or not, but having big issue and then printing money to keep people quiet. And then after that happens, then you have mass inflation. So then they have this cycle of all these things that are happening. Everybody right now also in fall 2023, whenever you're watching this, everybody right now is still hoping for the economy to keep booming and Bitcoin's about to go up. Meanwhile, he said this back in May of 2021, how I expect things to play out. Inflation expectations rise on the back of record fiscal and monetary stimulus. That's the money printer going brrr. Fixed income starts to sell off due to rising inflation expectations. Market sell-offs occur as interest rates go up and don't support the asset valuations. And then you get massive liquidity crisis, which is we're kind of in the midst of all of this right now. As credit contraction, we're seeing credit contraction right now. In fact, we're also seeing record level of credit card debt at the same time as having, basically astronomical, huge increases in bankruptcies and defaults on debt. And we're also seeing at the same time record low, like incredibly low amounts of personal savings still available. But remember, this is all US dollar. Have I said, has there been like a stacking of, man, let me make a bullish case for the dollar? I can't. I apologize. Massive liquidity crisis is credit contraction. We talked about that. Central banks are forced to step in to stop deflationary spiral and introduce record liquidity injections to suppress yields and reinflate the system, AKA driving the value of the dollar down further. That's the only cycle that happens, and has happened repeatedly over the last 100 years. Now, moving on here, we can see, okay, what does this mean? If the dollar's failing, how would that relate to Bitcoin? Well, here's Bitcoin's moves anti-correlated to the US dollar. Dollar is up, Bitcoin down. Dollar's down, Bitcoin up. Well, what do all the things that I've shown you so far show? It shows that a strong trend is coming for dollar not just to have a 1% pullback this is trending towards something cataclysmic for the US dollar. And again, I'm not saying this is going to happen in the next week, the next month, or even the next 5 years. But this is going to be something that is endeavored through the markets over the next, probably the rest of our lifetimes. But now is the time. You ever wonder why you didn't get that opportunity earlier on all these other things in your life, whether it was buying Amazon at the IPO or Google or anything? Here's your opportunity. And if you're already in, here's a strong reminder for your thesis to do anything that you can, whether it's create another capital flow, new small source of income, or stop eating out, or maybe not taking family vacations or even personal just vacations for fun on credit, stealing your ability to have future capital to put it somewhere that's going to be safe, like Bitcoin. This is all important stuff. We look here. Valuation, look at the evolution of purchasing power in the US dollar since 1970. It's gone down significantly. And this goes all the way till 2020. This does not include 2023. So your $100 value since what you could buy in 1970 has lost 86% of its value since 1970. Again, this is only up till 2020. Now it's about 92, 95%, somewhere in that range. It's incredible. But we look here, very simple. Cost of the average home, 1950, $7,354. In today's money, and this is a couple years old, $78,908. So this is what it should have been without some incredible level of inflation and just the increased demand due to all the money printing and the available capital out there. Today, $226. This is only 2 or 3 years old. Today, the cost of an average home is over $400,000. So this has already nearly doubled in the last handful of years. Car from $1,200, almost $1,300, almost 10x in today's money is what it should be. But it went up more than that, $23,000. Tuition at UPenn, $600, $6,000 if that was just adjusted. But no, what is it? $55,000. Point is, the US dollar is not your friend. If we just kind of, before you wrap out this segment of the show, now if we just look at this and we see that Bitcoin is such a strong asset and is so early in its level of adoption, we have institutions on the horizon with the Bitcoin spot ETFs, as well as the changes in the FASB rules, the fair value accounting. So corporations and institutions can hold Bitcoin on their treasuries, in their treasuries, in a way that doesn't set them up for failure for their stocks. Because, with the previous, before they changed this rule, if you held Bitcoin, let's say in February, and it went down for 3 days and you lost the value was down 20% below your purchase price. And then 3 days later, it recovered. At the end of the year, say you're up 100%. If you're holding it and you haven't sold, before the change of the fair value accounting, you had to list at basically a 20% loss. So why would they do that? It's suppression of adoption. Now they've changed the rule now. So not only do we have Bitcoin spot ETFs on the horizon, we have rules that have changed that make it at least not as unattractive. It's made it more attractive and less of a danger for corporations and businesses and these publicly traded companies to hold something like Bitcoin in the treasury, because I've just shown you a number of different examples of why Bitcoin is a better asset. And one of the many reasons that these institutions, they're looking for that next edge, where markets are going, what types of things different global equities are going to do, what's happening with traditional assets space globally, what's going on with money printing. Larry Fink himself said Bitcoin will transcend global assets and fiat currencies, something paraphrasing to that effect. Why? Because it is a hedge. It's a separation. It's an asset that is separated from needing to trust a government who print at their own whims to maintain power. This gives you power. Bitcoin gives you the ability to hold something that we can see based on the nature of how it was designed and how it is publicly distributed ledger. Gives you the power to not be phased out of control in your life, which is what inflation is in fiat currencies. Now, this is suggesting 25% of the world's wealth and basically $10 million per Bitcoin. Could that happen? Could $10 million per Bitcoin really happen? Yeah, I mean, think about how big the gold market cap is. Think about how big the real estate asset niche is. Think about, I mean, there's so many things out there. And there's going to be a tokenized economy. There's going to be real world assets that are going to be tokenized. Some of it's going to be Bitcoin. Some of it's going to be other different blockchain assets and projects out there. But things are moving. The trend is in this direction because it's so much more efficient. I mean, it is astronomically more efficient than what you're seeing in fiat systems. So if we scroll down here, look at this. Analyzing Bitcoin's value proposition, he argues that Bitcoin's ability to appreciate over time means that it is all but destined to suck in value from other asset classes. This is important. Among other reasons, this is because asset with such appreciation characteristics and increasing scarcity allows it to fulfill the role of digital gold. Does this mean gold's going to disappear? No, I don't think so. But these are going to run in parallel, and we're going to start seeing Bitcoin eat up some of the capital that comes out of these other assets and goes into this as another diversification within our portfolio. Is it going to take 100% of all these other assets? No, probably not. But even small percentages of each one really drives the valuation of Bitcoin up over time. And that's not even to mention the retail coming in. Bitcoin has an unthinkable property. It gets more valuable over time. Gold is good at storing purchasing power, but Bitcoin grows purchasing power. That is the key phrase right there. Value stored in Bitcoin becomes worth more every time value stored in Bitcoin becomes worth more over time because of Bitcoin's design of increasing scarcity. This is a halving we're talking about. The reduction in how much rewards are going out each day, which the rewards, think of it as programmed inflation. And those rewards are getting cut in half every 210,000 blocks, AKA 4 years. You just have to outlast the admittedly brutal volatility along the way. Strength of holding, the strength of having a strategy and understanding where good opportunities are to buy and sell. Now, scrolling down here, with that in mind, we have to ask ourselves an important question. When Bitcoin's mechanics continue to play out, cause it to continue appreciating reliably in value every 4 years, will more than 0.05% of the world's capital eventually realize it wants to be in an asset like this? The only logical conclusion is yes. You can just see the difference here. What is a depreciating asset? If you really think about it, it's not listed in here. US dollar. So we need to understand all of these things. Look at this inflation calculator. Let's go 2016 to 2023. $100 back in 2016. And this is only a matter of, what is that, 7 years? You would need $122 to buy what you could have bought for just $100 in 2016. You come back, you go, let's go to 2003. 59, almost, that's crazy. For $100 in 2023, what you would buy, you would need $159 now. US dollar. It's not where you want to be. Now, again, looking at the halving, we understand what cycles typically do. It doesn't mean it has to happen. So if it doesn't happen after this next halving and we get a lot of accumulation sideways, remember, we have a lot of institutions and smart money and ultra wealth on the sidelines. And once they start getting in, it will probably manipulate price a little bit. So we may not get some astronomical boom coming post halving because everybody thinks it's there. But that does not mean we're not going to have prices going up. Because of the program scarcity and the growing adoption of all this over time, price is all but certain to go up based on the nature of how this is designed. It doesn't mean it's going to go up right when you buy it. You have to understand the dynamics of these markets and what's going on globally with the monetary systems. You have to understand what your risk tolerance level is, what your time horizon is. Don't invest something that you need to pay rent in a week, hoping you're going to double it in a week. You're going to end up without being able to pay rent and no money. That's not how you do it. Set up a small allocation. I don't care if it's $5, $15, $100, something that doesn't put you out or take away the ability for you to feed yourself or your family. Small allocations over time. And as you gain more education, more awareness, you can layer in and stack in more and more over time. Now, what I wanted to show you here was, I forget where it is, HODL model. Looking at this, this is incredible. Over time, this is supply. You see how the supply is expanding? Because we're having a lot of blocks mined early on. And very, at one point it was 32 Bitcoin per block mined. And then it was 12 or 16 or so. And then it broke down. It's halving, literally halving. That's why it's called the halving every 4 years. But what we're seeing is now we're getting a reduction. This was expanding, new supply. Now, after this third halving, we're actually, you can't really tell here, but there is, I've looked at the numbers and actually talked with the Rational Root who designed these charts. This is actually reducing over time. You see, this is the easier way to see it. Third halving, this is getting contracting, meaning we're having less new supply while we're also having more illiquid supply. So not only having less supply of Bitcoin on a daily basis, new supply coming in, but more supply that's being bought is being held off of exchanges known as illiquid supply, meaning it's not, people are preparing to hold it longer term. We're seeing record levels of this. Now coming here, just wanted to point this out. Will Clemente, once Bitcoin's market cap gets past, say, 10 trillion, it's roughly about what gold is. Gold is like 11 trillion, to 15 trillion to 20 trillion, its price collapse. And we will have bear markets in the future. We may even have a significant one that shakes the world. But this is important. Its price collapse would be systemic to the entire economy, much like when banks fail, right? And would trigger intervention, monetary debasement, which would damper its drawdowns and largely become self-reinforcing for Bitcoin's continued rise. There are other ways it could do so. Bond markets collapse, massive cultural shift, etc. But its market cap continuing to rise is really all that it needs to reach escape velocity on a dollar-denominated basis. So as we have issues with the economy over time, over the next 15 years, every one of those issues, as hard as it is in our everyday lives, when we're not prepared, it becomes more self-reinforcing to the thesis, and not only the thesis, the actionable use case of Bitcoin over time only gets stronger as other parts of our system fail. So with that, I just really wanted to tell everybody, be patient. Bitcoin, united we stand. We have to stand for ourselves, for our families. And standing for ourselves and our family, meaning that we are financially sovereign. We're not reliant on other systems of government to give us handouts and keep us basically under their thumb. We need to look at these other opportunities that are out there in the world so that we can participate in our future, not be subjugated to it. That's what this is about. That's what Bitcoin is about. Bitcoin was born out of the housing crisis in 2008. Nay, was it really created just because of that? No, this has been a systemic issue over the last, since currency was invented. Why do you think when you pull a quarter out of your pocket, it has little ridges on the edge of it? Because over time with coins in the past, people will shave off little bits of the edge, devaluing that money. So they put little ridges on there. So it basically is proved that that coin has not been shaved down. So the US government is preventing you from doing that while they're basically not just shaving down. They're taking not only a machete, they're taking this Excalibur sword, just chopping and shaving down the value of money every time they turn on the printer. And the reasoning they have is because of this issue or that issue. But the issue is the mismanagement of these funds, the lack of transparency about where money is being spent. Could be our government. That's the case of any government, really. So Bitcoin is the best opportunity, the only opportunity yet so far in the history of the world that allows you to step into having control of your future, so long as you're patient, you educate yourself, and you get involved with understanding what money is, how it's valuable to your life, and how you can make sure that you're stepping in to an opportunity that you can be in control of. So if you want to learn more about any of this, head over to bitlabacademy.com. You can see right here, if you come over here to courses, we've got all kind of courses breaking down everything from the basics. This is all free courses here. All you need to do is register. And then we have the all access BitLab Academy as well, which also gives you access to the premium Discord. But talking about self-custody, the fundamentals of trading, psychology of trading, on-chain data analysis, candles, candle patterns. And these are not all individual lessons. There's about anywhere from 15 to 25 lessons in each one of these courses. And we're filming more and adding to this over time so you can get involved with understanding how you can not only know what Bitcoin and blockchain is, but participate in knowing when the best times are to buy or sell, whether you're an active day trader and you're trying to really capitalize on it and do it as, for a trading portfolio and expand it quickly that way, only if you have a good strategy. Or if you just want to do it passively and figure out, I just want to buy somewhere near bear market bottoms and I want to take some profits somewhere near market tops, which in all honesty is probably the safest bet for most people. But get involved here, sign up, join us in our area. You can sign up right here for the free course right here. This is just the basics. If you want the all access with the premium Discord, it's right here. And you can use Give Me 30 at checkout, all one word, Give Me 30 for 30% off your first month. Or you can sign up right here for the BitLab Pro, which is all access to our courses. You get the premium Discord and you get our full BitLab Trading Stack indicator set that helps give you data on the charts to understand where the moves are coming and give you signals about setting up for the best trades to take. So with that being said, I love you all. I appreciate each and every one of you for tuning in. I hope you all have a wonderful day, and I'll see you next time.